Guys, welcome back to the Millionaire Logistics YouTube channel. Here, all we talk about is forex trading, forex analysis, and of course, making profits in the forex market. Side or market coming from the high side, right? Expecting making a high here. I'm expecting a higher low. Market moving forward to the upside. Now, I don't take cognizance of ranging market while I'm trading this. Now that is simply because we're dealing with a very small time frame here, right? And my target is 20 pips. So even within ranges, guys, even within ranges, the low and high are often not that equal, right? Now, if you're looking at the textbook patterns, it may be a textbook pattern, you can see some illustrations implying that ranges, have equal highs and equal lows for it to be a ranging market, but if you go scale down to a lower time frame, this is not what you see on the chart. Ranges in most cases do not have equal highs and equal lows, because even within these ranges you could still find other little support levels and resistance levels alike. Okay, so the market is a very imperfect one that you don't really want to seek perfection in the market. Otherwise you could be chasing a non-existent thing. All right, so let's go down to the business. Aside the market structure I take cognizance of, guys, I also make use of what the trading sessions, as I said earlier. My favorite trading session happens to be the London trading session. Okay, at the beginning of the London trading session, I start hunting for opportunities to get into the market almost immediately. All right, now the Tokyo trading session, in my previous content I've explained, I actually look at the market from the close of the previous day, so from the beginning, from 00 hour. So in most trading, like from where I am, I'm based in Nigeria, so looking at from 10 p.m, right? 10 p.m local time, 12 a.m chat time, 10 p.m local time. And then I'm seeing that the market from that time to about 7:59, that's the beginning of the, so at 7:59, yeah, so by 8 a.m that's the beginning of the London session, and then by 9 a.m the Tokyo session ends. So we're looking at 10 p.m previous day to 9 a.m the following day. That's where the Tokyo session ends. And then from 8 a.m the current day, right, to about right here we have, so to about 5 p.m, that's the window period for the London session, right? And then from about 1 p.m, right, 1 p.m local time, Nigerian time, 1 p.m Nigerian time, 15:00 chat time, that's 3 p.m chat time, right, to about 9:59. Okay, that's where the New York session lies. Okay, but now I like starting my trades from the beginning of my most preferable trading session, which is the London trading session. Okay, now looking at this market, guys, most times you don't expect perfection, of course. Okay, so I think I lost a trade here in the London session, so I got into the market at the beginning of the New York session. Now let me show you exactly what happened. All right, now I had here, this was the low, right? I saw the market before the London session, before entering, this was the low. Okay, and this was the highest point. So I assumed this market to be this scenario, moving from a low to a high. So I was expecting a corrective move, okay, which is what the higher from the point here to a higher low right here. So I found the market, my expectation, I found the market at a corrective phase, at the end of the corrective phase, and I entered the market hoping to trade what an impulsive phase to the upside. Okay, right here. So this was the kind of move I was expecting. All right, did that happen in the market? Yes, eventually. But did I get kicked out my stop loss? Yes. I'm going to show you exactly how that happened. All right, now the market didn't move immediately as I expected. Okay, now this was how I traded it, from the lowest point, right, to the highest point. Okay, so This was where I saw the market. In fact, I was convinced that I was looking at the 79.00. The market was reacting at the 79.00, which I told you guys happens to be what an optimal trade entry, optimal opportunity, maximized one, a very good one. So this was my target, right? So 31 pips over here, so I'll just targeting this high here, about 22 pips. Okay, somewhere around here, this was my target. All right, and then I set my stop loss very much below the 1.27. Why? Is because for some reasons, guys, I like to set my stop loss. I like to give room, for the market. So if I'm to take this here, I like to place my stop loss below the second line, second significant. So if I'm taking at 61 right here, I'll be placing my stop loss below 100, below the 100 level. And if since I took here at 79, I placed my stop loss below 1.27. Okay, that's exactly what I did. All right, and I did that well, I did that, and entering the market, guys, at 79 fib level, my target right here, I set my stop loss here. But then, guys, I left the market. I let the market go. I let the market, to do its thing and all. But getting to the beginning of the New York session, which held another opportunity and all, at this point where the market wasn't really marketing, where the market wasn't really marketing, just at the beginning of that, I got stopped out. But guess what, guys? That wasn't the end. So there was another trading opportunity for me. So now this is where it gets very interesting. There was another trading opportunity for me right here, and this was how I took it, guys. Okay, now looking at the market, guys, like I told you, the market is an imperfect one. We don't actually seek perfection when it comes to market conditions and trading. Okay, so now regardless of what the market did, I was now seeing a different thing, because I was looking at what the market has now made, printed what the highest point here, and the market was going to the lowest, was going lower, and then right here you have a lowest point. So guys, regardless of what the market has done, I'm going to tell you what I thought, what I was feeling before the marketing. Okay, so I was expecting this kind of move. The market had made a low. I was expecting a corrective move and then an impulsive one to the downside. Yes, to the downside. Why to the downside? Now, regardless of what this market did, this was what I was expecting. Market coming to the downside. Okay, so what I did, martingale style, I increased my lot size, and then I went for the corrective move right here. At the beginning of the London section, I was at 0.0, so this was what I did. I targeted the 50 fib level right here, the 50 fib level. Okay, now why did I not target the 38, guys? It was quite close. Okay, I didn't target the 38. I wanted to at least to cover for some losses, so I targeted the 50 fib level for 24 pips. Okay, and where did I set my stop loss, guys? Right here. I set my stop loss at 20 pips below the minus 0.7. okay, now this time around, guys, I was taking a buy just as I took the first time, but I was trading a corrective move. Okay, I wasn't trading all the way that the market I was going to take all this profit. No, I was just taking just a chunk, a small one, at 50 fib. And did I make some profit? Right? Yes. Did I lose some money for that day? Yes. Because I was kicked out of the market right here at 20 pips. But somehow some days are like that. Like I said, we don't expect a perfect market condition. Okay, so guys, that was my trade on Friday. So don't forget, if you like the idea, I believe this pattern of trading, this concept is the easiest I've ever shared out, and it's kind of cool for me. I like it. So if you like it as well, guys, don't forget to like, don't forget to share your thoughts in the comment section, and of course don't forget to subscribe to the channel Millionaire Logistics Forex. Thank you.